as I just mentioned, sitting at around 161 to the US dollar. I mentioned that this band is going to be implemented 150 to around 160. Give us an indication of what kind of movements will be made by the central bank if it breaches those band on either side.
Looking at the decision from the MPC on the currency band, I would say that it's not much of a surprise. We really did not think that they were going to make any major shift, considering the fact that the major shift that they made last year came in after a period of over 2 years. The currency rate has mid-rate has hovered around 150. Overall, we think the Naira will trade towards the upper band of that range, 160 for most part of the year. And looking at the market's kind of muted reaction to the MPC decision, we are fairly sure that our overall view still holds on the currency for now.
Does it basically reiterate the point in terms of what we have actually been seeing from the Naira going forward? And we know that one thing that investors do want is stability. Given the fact that we are going to see a very controlled Naira, is it going to be a very expensive exercise for the central bank?
Well, overall, I mean, I think the central bank reiterated the terms of price stability, and actually they put out a bit more details in terms of achieving that. We think that they've done that successfully. They've introduced measures to ensure that price stability was overall achieved the previous year, and I think they would be a bit more proactive in their reaction to price volatility and ensure that we still maintain that kind of stability that they desire, or that the market generally would desire from the central bankers and the activities in the market. Fairly enough, I think I don't think there would be any major shocker in achieving what the band that they hope to achieve for the currency.
With regards to the removal of the petrol subsidy, that of course has been a topic of great contentions for the most part of the year. What kind of impact is it going to have on inflation? We have seen that a lot of rhetoric is coming out. Inflation expected to rise to as much as 14.5% in the first half of course, 2012. It is expected to now start coming down in 2013 into single digits. Do you think it's primarily focused on this removal of the fuel subsidy?
Well, like the central bank said, said clearly. I mean, looking also that the picking of those figures of where they expect the inflation figures to be wasn't really like off the hook. It was cyclical, as in what the previous price increase in PMS has translated into inflation levels, and we've seen that it's supposed to be like a short-term shock into the economy, and overall you see it trending down as prices and the various components adjust to the new prices of the petroleum products. Largely, by and large, we think that we agree overall with the central bank forecast in terms of inflation, and in terms of after a while we see it tapering down into the single digits. We must not be unmindful of the fact that for most of last year, Nigeria actually saw rate increase for almost throughout the MPC meeting that held for last year. So if considering where we started from last year into where we ended, I think they've done largely a lot to contain inflationary pressures outside of the short-term shocks that might happen as a result of the fuel subsidy partial removal.
Let's also touch on the interbank market at this point, Nwabueze, given the fact that we saw no real movement coming through, no real response with regards to what we saw from the central bank yesterday. Are you expecting any real movement on those yields going forward?
Overall, I think the general perception, in as much as the market largely didn't expect any shift in the rate direction, I think his statement actually gave a few pointers, and we saw the reaction, especially in the fixed income markets, where we saw the prices moving up and the yields tapering down, even on the short end out to the long term. I think that's what you'll continue to see. You might see a bit of caution as market awaits subsequent inflationary reports, but overall, if our major take from the statement is is on the budget component and what and how far they will continue with the prices setting the price for crude in the budget. I think that any discussion with that would cause a lot of people to rethink. But outside of that, if it stays at the expected level, then I think by and large we expect to see a fairly smooth and easy year.